What's up guys, Josh Olfert here back with another video, and today we're talking about ethical investing. Is this a massive stride in social progress, or is it a virtue signaling hoax? Time to think like an investor. So if you're new to the channel, my name is Josh. I am obsessed with this idea of financial independence and investing and increasing income and all that sort of thing. I run a wealth management firm, and if you guys are into that sort of thing, make sure to hit that subscribe button ethically and hit that ethical like button so that we can get into this ethical discussion about ethical investing. So, ESG investing, what is this all about? It's kind of crazy, honestly, because fund flows, the assets or the investments flowing into ethical funds over the last year, in 2019, grew by triple. So in 2018 or so, there was about 5 or 6 billion going into ethical investing, and now there's over 15 to 16 billion dollars every single year flowing into this asset class, this whole ethical investing idea. So why is this? Well, the whole idea is that a lot of people are investing, or they're seeing their holdings in their portfolio that might not reflect their values or their ethics in their life. For instance, they might look at their portfolio that some financial advisor has made for them or that they've picked themselves, and they realize that there's big oil producing companies or big polluters or gaming companies or tobacco companies, and people are starting to realize, I might not align, my philosophy might not align with the way that I'm investing. And ESG really stands for environmental, social, and governance. And what this means is we're really just investing in a way where we're taking out the bad actors, companies that we don't really agree with. Now, there's two main arguments for ESG. One is, this is a massive leap in social progress. This is a huge step towards conscious capitalism, making the world a better place. And the other side of the debate is, well, here's the CEO of Social Capital.
ESG, real or marketing?
It's a complete fraud.
Complete fraud.
It's so ridiculous. Governance has been addressed. That's useful. But, this idea that you're going to get a stamp that says, oh, listen, my supplier, I've offset their carbon credits and now I understand it's a joke. It's jargon. And I think what people are doing right now is using it as a way to, for example, if you can paint yourself as ESG, in Europe, you can essentially borrow money from the ECB at negative rates.
I'm going to come over and give you a massage now.
It's a carry trade.
So first, I'd like to look at what are the greatest parts about ESG investing. Well, first things first, if ethical investing gets this critical mass, if they reach this tipping point where companies now have to really start to keep an eye on their supply chains and on their pollution, on their effect on the environment and all these different things, we're going to see a large shift, because if investors won't invest in companies if they don't meet certain ethical criteria, that means these businesses and these corporations are going to have to start acting in a way that will allow them to attract investors. If at some point the only companies people will invest in, especially young people, or companies that can show that they have some moral base, then companies are going to have to adapt to that if they ever want to find more investment. The next really interesting thing about ethical investing is it's showing the market, it's showing Wall Street how much the next generation of investors really does care about putting their money where their mouth is when it comes in terms of their values and their investments. And they might even be sacrificing their return. They might be willing to sacrifice their wealth and their return on their investment in order to do that, in order to feel like they're more aligned with their investments. More on that a little bit later. Another fascinating thing I'm finding about this whole phenomenon is that I'm seeing a massive shift in these younger generations being willing to put their money where their mouth is. We are essentially showing Wall Street and showing the market that we are willing to maybe even sacrifice return or pay a higher fee if it means that we're going to invest more in line with our values. For instance, my company, we offer socially responsible investing, and the amount of people who have gained an interest in that over the last year specifically has been kind of crazy. We're seeing it in our own business. And I speak with analysts all the time who are saying now when they're selecting stocks for their portfolio or some fund, it has to go through some ESG or through some ethical lens. It really is kind of becoming the future. But something I find truly interesting about this from my seat where I sit as a financial advisor is that people who own ethical investments, or clients who feel like their investments are more aligned with their philosophy actually tend to hold on to their investments significantly better than someone who doesn't really relate to their investments at all. I mean, if you go through a massive market crash like we did earlier this year, and your investments really have nothing that connects you with them, it's kind of just something you contribute to, versus having a portfolio that's like designed for you and specifically with your principles and morals in mind, we're finding that people who invest kind of with their identity or with their philosophy actually tend to hold through those periods. They tend to reduce the behavior gap that we see when investors try to trade too much or get in and out of one specific stock or make all these errors that reduce their return. Now, here's where I think a lot of people go wrong with ethical investing, because there's this big misunderstanding in investing, and I see it all the time. People think that when they invest in a business, that it's literally supporting that company with those dollars they invested. For instance, a lot of people think that if I invest in a business, those dollars are supporting that company and doing really good things or doing really evil things. But this is where there's a primary distinction that you have to understand, especially in the ethical investing debate, and it's this difference between a primary market and a secondary market. Now, I'm not gonna get too complicated, but a company only benefits from their investors when they issue the shares in the first place, when they have an IPO or when they issue new shares. That's when there's this direct support, this giving money to the company so they can expand. But once the company's gone public or once they've issued those shares, we're now in what's called the secondary market. We're not in that primary company to investor market anymore. Once you own the shares, you're just trading those shares amongst other investors. So if you go and buy ExxonMobil stock, it's not as if you're necessarily supporting that company by giving the money to Exxon. What you're doing is you're taking that share off of someone else's hands. Your money has gone to some other investor, not to the company. So I get it though. I totally understand, because if we buy shares of Exxon, even if that doesn't go to support their business, it still puts us in a place where we're rooting for them. And with our own money, we want that company to do well and we want them to succeed. So one of the big misunderstandings is that ethical investing is super insanely important because every dollar we invest supports the company. No, that's not true. But when you do buy those shares, you really are rooting for that company to do well, and that's the problem that we're dealing with here. Now, one thing for me personally is that as an advisor, I actually make more money when more people invest with me, right? So if there's some kind of idea out there that is doing really, really well, it might be in my best interest to try to pursue that. Or let's say in the case of ethical investing, asset managers, different people on Wall Street who are building these products, are making a lot of money to manage these investments. So if all of a sudden it seems like, oh, all these young kids want ethical investments, what they can do is they can essentially just dial in on that segment to try to make as much money as possible. So we're not necessarily sure if this massive shift to ethical investing on the supply side in terms of these firms building the product, we're not sure if that's because they really believe in it or because it's just attracting so much in new revenue and new fees for these companies. Now, another downside of ethical investing is this whole concept of greenwashing. And it's this idea that, okay, well, we have a company that might not be so ethical, but we're gonna wrap it in a really nice ethical package, and that way we can sell it. You know, there's a whole story of like 4Ocean and this whole scandal of how like 4Ocean is a for-profit. And if you don't really know what that's about, it's like those bracelets you've seen where all these kids like wore these bracelets that had ocean water in them, and for every bracelet you buy, it cleans up a pound of ocean litter. I don't really know exactly, but the whole idea there was people realized it was a complete for-profit company and that they may have been making quite a bit of money to essentially, I guess the idea would be greenwash that specific product. Now, what I found working with clients is someone will come in and they'll say, you know, I want to invest, but I want to do it according to my values. That's big for me. I don't want to invest in banks because I think banks are evil. And I'm like, all right. And they don't want to invest in oil producing companies because oil is evil and it's destroying the environment. And I'm like, okay, these are some serious restrictions. And what we find is that when we use these different ethical investing funds, we look at the top 10 holdings. For instance, let's look at the Johnsy, the #1 ethical investing ETF in Canada, or one of the largest, one of the ones that I see all the time. And when a client looks through this and they've specifically requested, I want ethical investments without banks, without oil, without gaming, whatever, the biggest holdings in that ETF are the big 5 banks and two massive oil producers, Suncor and Canadian National Resources. So we're talking about investing ethically, but when you dive into what's inside these different funds, you realize that it's not really eliminating the worst companies, it's just seeing which companies are more ethical relative to the other ones in their industry. Which means a client who wanted ethical investments ends up with a portfolio of all the things they didn't really want, but just in smaller weights. In addition to all of this, one of my investing heroes, Cliff Asness, who was like a quantitative investing genius, for lack of a better word, came out with this really insightful memo called Virtue is Its Own Reward. And it talks about all of these different people are saying that, well, if we invest in ethical companies, our returns are actually going to be quite a bit higher because we're eliminating these big risks of corruption and we're working towards a more sustainable world, which is needed. And Cliff comes out and says, well, you know what? The reality of ethical investing is that you're going to get lower returns. That's just how it works. It's like, imagine if let's talk about we're doing a 100-meter dash, me versus you. And I'm allowed to wear shoes and you're not. It's like, who's gonna win? I have a massive advantage there, unless you're like Usain Bolt or something. But the general idea is, if I can invest and I can choose anything from the entire universe of investments, and you have to invest but exclude like 30% of companies, who statistically has a better bet of outperforming or having greater performance? It's gonna be the person who doesn't have the disadvantage. And at the end of the day, if a lot of people start flocking to these ethical investments, it's going to increase the prices, it's going to increase the valuations, which means the future returns might actually become lower. So this whole idea of virtue as its own reward is this concept that ethically investing is something that's going to cost you. It's going to cost you in fees, it's going to cost you in performance, but that's what virtue is. It's making a sacrifice for some hope of some better future. That being said, one of the downsides, the returns are going to be lower and the fees are going to be higher. And the last thing I'd like to mention is something called Goodhart's Law. Goodhart's Law essentially says that anything that you really try to measure ends up becoming a bad measure. Like, let's say, for instance, we are in a factory that makes nails, okay? We're hammering nails. And if we say to all the employees of our factory, all we care about, the only thing we care about is how many number of nails are produced. What you might find is that they make thousands and thousands and thousands of really bad nails or really tiny nails. And if you say, oh no, like we need heavier nails, we need bigger ones, then you go and say, well, what we're gonna measure you on is we need the heaviest nails. And that's the metric you measure. And now what you realize is the whole factory just built one massive nail, right? So the example here is, if you measure somebody according to a certain metric, the players are going to start to try to game that metric. So I'm kind of worried about how Goodhart's Law is going to play out with ESG investing. It might lead to a lot of virtue signaling without much real change. But the last thing I really want to think about here and discuss is, like, do we want to live in a world where we're given a template of what our ethics should be? Because right now, ESG is essentially saying, okay, here's the ethics, here is what is moral in the world. This is kind of what ethical investing does. It gives us a pre-selected ethics to assume that everybody kind of has the same ethics, but in reality, everybody has a different view of what's virtuous. For instance, there's a reasonable case to be made that producing a ton of oil in Canada is very ethical, because if Canada stops producing oil, it's not as if the world's just going to stop using it. We're just going to have to now import our oil from Saudi Arabia, or places where maybe women's rights aren't as great, or where employees are abused and underpaid. So there's a really rational case to be made that if we want the world to be a better place, Canada needs to produce as much oil as possible. That's one potential argument. And maybe an argument that I would side with is, what makes a company ethical is if it has skin in the game. What we don't want is companies taking massive risks, and if it doesn't play out, they just socialize the losses by getting bailed out or making the taxpayer pay for it. That is the opposite of ethics for me. Can I get an ETF or some sort of investment that eliminates companies that don't have skin in the game? Why does it have to be related to oil or gaming or certain things that some people find ethical and others don't? You see, this paradigm kind of really enforces this idea of having really predictable political views. If I can, for some reason, determine your views on climate change and capitalism and the death penalty just because I know your views on abortion, it means you're probably not a clear thinker. If I can pinpoint one of your beliefs and just understand all the other ones, it means that you're really clinging to an ideology. You're clinging to someone else's framework rather than thinking through the issues yourself. And that's what I'm kind of seeing with ESG. This broad acceptance of what the ESG, what these fund companies say is ethical. Lastly, all in all, I think if we want to make some sort of social change economically or with our finances, the best way to do that is going to be our spending habits. If you don't like what oil producers do, stop spending money on oil. If you don't like gaming companies, don't go to the casino. If you don't like tobacco, don't smoke. Every dollar you spend is a vote for what companies that you want to exist. And all of their supply chains too, because when you give money to a company, that gives money to all of their suppliers. So by changing the way you spend, you can actually create a difference in the world. And I think that is probably a better way to bring out the capitalism you want, rather than taking this templated view of ESG and investing according to that. So anyways, guys, I love what ESG is about and what it's trying to do, and enforcing conscious capitalism, all this sort of thing. I'm less sold on the effects it can really have and the incentives that it's going to create. But anyways, if you guys enjoyed this video, thank you so much for taking the time to watch it. Hit that like button, hit subscribe, and turn on post notifications for more videos just like this one every single week. Until next time.